Hi, y'all. I am Reba, and I lead marketing and sales here at Good Agriculture. So, a lot of you I probably already met either at a conference, on the phone, or through emails. But my role is really just to help you understand what we do, how it fits into your farm business, and of course, helping you connect with the right level of support without having it be too overcomplicated. So, we are Good Agriculture. And we do what we do to help farmers really get the clarity that you need around the business side of farming, especially when it comes to anything financially related to your business. So we try to do that so that way it's a way that actually makes sense in the real world. And we work with a lot of folks who are capable or incredible farmers and who don't necessarily sign up to be those bookkeepers. You probably don't want to be a bookkeeper or an accountant or really manage that paperwork. So that's what we do for you. So I will pass it on over to Alan, so that way he can introduce himself.
Hey everyone, glad you're here. My name is Alan Osorio. I'm the farm finance lead here at Good Ag. Basically, what that means is that I do a lot of the hands-on bookkeeping, a lot of that, customer delivery, putting together financial reports for all of our customers. And yeah, so ultimately just trying to help our farmers achieve financial clarity. And I actually won't be here for the full time of this session, but I believe, yeah, my info is there. If anyone has any just general questions, or if you want to reach out to me for any kind of bookkeeping questions or what Good Ag does, I'd be happy to respond to those. So yeah, now I'll pass it off to Alex.
Hi, everyone. I'm Alex. I am the CEO here at Good Agriculture. We're a small business, so that means I wear a lot of hats, helping farmers with their finances and then helping with a lot of company operations. I will be leading most of tonight's webinar, so you'll get to hear me talk a lot. My email address is also there in case you ever want to reach out about anything. And I will hand it over to Una.
Hello everyone, my name is Euna a CPA from Good Agriculture. I'm so happy to meet you guys all, and please let me know if you have any questions regarding tax preparation. Thank you.
All right, so we're going to kick off just with some ground rules. Thank you guys all for being here. I know that taxes are not necessarily anybody's favorite topic to talk about, but so we really appreciate you all taking your time to come hang out with us and learn a little bit over the next hour and a half. So first thing is please do not wait to ask questions until the end. Feel free to raise your hand, put a question in the chat, anything like that. Reba and Una will be helping me monitor the chat to make sure we answer those questions along the way. Also, feel free to ask specific questions related to your farm's context. So first off, if you have a specific question, you're probably not the only one who has that question. And second, sharing specific examples is oftentimes a really good way for other people to learn. So don't be afraid to, get really specific. Third, there is no such thing as a dumb question here, especially when we get into the tax stuff. This is complex stuff. It's really complicated. It's something you only have to do once a year. And so, really no holds barred here. And please do be engaged. We'll have some poll questions and little quizzes along the way. So feel free to, again, put answers in the chat, raise your hand. We are here to help you guys. And then, of course, there's just the disclaimer here. We are getting into some topics that flirt into, the legal side of things, the tax side of things, the financial side of things. This is not legal or financial advice. We, of course, do have CPAs on our team to help you out if you decide to get our help. But, we'll have to sign an engagement letter and all that kind of good stuff. So, don't sue us if this advice is not helpful for you guys. All right, so we're going to kind of do a little icebreaker to test out the chat functionality and make sure that everything on the webinar is working as expected. So as a little icebreaker, what is one thing you'd rather do than your taxes? And Reba, I don't know if you have an answer you want to share as the non-finance person from our team here.
Yeah, of course. So I agree with Mary. It's going to be very similar. I would rather run a marathon, and I am not great at it. What about
Well,
you, Alex?
I was gonna say that I always end up doing housework, like just like cleaning or scrubbing or just like doing some spring cleaning rather than doing my taxes, which is ironic given, I do this for a living.
And we got a few answers in the chat. So Mary said that she would rather go on a walk with her dog. I agree with you there.
Yeah.
Austin mentioned that he would think about doing his taxes. That's proactive. We have muck the barn or do dishes, bake a cake, or work on a craft project like knitting. I like that.
Good answers. Reba, anyone having any technical difficulties?
Not that I see so far. Seems like we have a few answers in the chat going on.
All
So
right.
we're good to go.
Awesome. All right, so just want to give you all an overview of what we're going over today. So we obviously already did the introductions, but we're going to be pretty comprehensive going over taxes. So we'll spend most of our time on the income tax side of thing, because tax day is April 4th or 15th, and that's probably why most of you guys are here. But we'll also spend a little bit of time talking about sales taxes and property taxes at the end. And then, of course, at the very end, we'll share some additional resources, have time for questions, and then wrap up. So one question for you guys, just to make sure we're tailoring this to what you need. What are your goals for the session? Is it, staying compliant with your taxes? Is it making sure you're taking advantage of all the tax benefits? Is it to save time this tax season? Or is it something else? Or could it be all of the above? You can feel free to drop answers in the chat, and we'll make sure we kind of tailor this and make sure we're hitting on all the topics y'all want to cover. Also, feel free to just put the numbers in the chat if that's quicker. You can just do like 1 and 2, 1, 2, 3.
Okay, we're starting to get some answers. So 1, 2, and 3 so far.
All right.
2 and 3, 1 and 2.
And since number 3 is coming up a few times, so this is actually the second webinar in our 3-part series. Hopefully some of y'all were able to join for part 1, which went over bookkeeping 101. But if you haven't, a lot of the bookkeeping stuff will save you time during tax time. Reba, while folks are typing in the chat, do you mind dropping the link to the bookkeeping 101 webinar?
I did. So you can feel free to
Awesome.
click on that link to watch the recording.
Awesome. And of course, our contact information is in there. So feel free to reach out with any questions you have that we didn't address during that webinar. All right. So before we jump into all the fun content, we just want to share some deadlines for y'all to know. So January 15th was the deadline to pay estimated tax, if it's applicable to you. Obviously, that was a few days ago. So if you haven't already paid your estimated tax, never fear. There actually is a farmer special date. If you file by March 2nd, and pay all of your tax by then. If you didn't pay your estimated tax, no worry at all. If you don't get most of your income from actually farming, I would, get on the tax filing as soon as possible. You may have a little bit of a fine for being late, but it shouldn't be too much of a problem. February 2nd, that is the deadline to get your 1099s and W-2s out to your contractors and employees. March 2nd, like I said, is that farmer special tax filing date. If you get your taxes is done early, you do not have to worry about that estimated tax. March 16th, if you are structured as an S corporation or a nonprofit, that is your tax filing date. And then, of course, April 15th is the tax filing date for most of us. So yeah, those are just the deadlines to be aware of. So quick question for you guys. How much time did you spend dealing with your taxes last year? Anywhere from less than 20 hours to 50 plus. Did any of you not pay taxes last year? Maybe because you're a little behind, or maybe your business is new last year, so you didn't have to file taxes. How much of a time suck was this for you guys?
I think they're thinking about it for a little bit.
I know for us, we did fall in that less than 20, but unsurprisingly, we're an accounting firm, so we didn't have to do any of the like books cleanup part of it. So if you take that into account, we probably were at the 40 to 50 mark over the course of the year.
So we're getting some answers in there. So we have one 30 to 20 hours, one that's less than 20, a couple that say that their farms are new. So this would be
Nice.
the first year filing. And then one said like for a few hours for the taxes themselves, but doing the bookkeeping was way more than 50 hours.
Okay, so we got good range of answers there. That's great. All right. So got to just do a little spiel at the beginning of like why are taxes important? So the number one reason is you have to do it. The IRS will come after you if you don't. It may take them a little bit longer to find you in some cases, but they will eventually find you. And so that's really the number one reason. But number two, there's actually quite a few agriculture programs, so like FSA loans, a lot of grant programs, things like that require you to be up to date on your taxes. And so you may be missing out on a lot of cool opportunities for your farm if you're not up to date. The third reason, honestly, is we know that bookkeeping is super important. It's important for you to know just where your business stands in terms of profitability. And let's be honest, tax filing is a forcing mechanism for a lot of us to just see how the farm did in the past year. And so, there's an upside to that. And then, the last reason, I'm just going to reiterate, you have to do it. And it will just reduce the stress in your life if you're on time with this, it was done correctly, and you just, don't have to be in fear of the IRS. So the first thing we're going to cover is some of this tax stuff differs a little bit depending on how your business legally is structured. So again, we are not lawyers. So we're not going to be able to answer any specific questions on this. But if you're just wondering like, hey, how should I legally structure my farm for tax purposes? Just a couple of recommendations here. So one, if you look at the box on the right, you definitely should have some kind of business structure for your farm to protect your personal assets in case something happens with the business. So, for example, in case someone eats something you grew and gets sick and they sue you, they can only go after the business assets. They can't come after your personal assets. A lot of these business structures are really simple to set up. You can just start by filling out a short form on your state's Secretary of State website. And so we highly recommend getting one of these things. To be honest, most farms are structured as LLCs, which basically means the business income is passed through on your own tax forms. So basically, the IRS will take your business or your farm income and whatever other personal income you had from maybe a W-2 or 1099 job, and it'll just add those two things together and it'll just tax you on the total. So it's a very simple tax structure. You don't have to worry about any like double taxing or anything like that. So if you're not sure where to start, an LLC can make a lot of sense. Some folks choose to do an S Corp or a C Corp. The thing to be aware of with the C Corp is you will have to pay the corporate tax plus any owner salary or dividends you take out of it will also get taxed. You basically get taxed twice, which may not be the best. But if your farm is getting quite large, it has high income, or there's like a weird tax break around providing employee housing. So if you are getting to be like a really big organization, then a C Corp might be a good move for you. So again, this is not legal advice, but if you don't have one of these business structured, it might be a good idea to look into one of them. All right, so we're going to talk about a few different tax forms today. So again, this is all on the federal income tax side, which is where we're starting today. So Form 1040, everyone has to fill this out. This is your individual tax form. So whether or not you have a farm or any other business, like you will have to fill out your Form 1040. Schedule F. So this is a unique form. It is profit or loss from farming. So farmers are the only ones who fill out this tax form. Pretty much every other business fills out Schedule C. And so if you are working with a CPA, and they don't know what Schedule F is, you may need to work with an agriculture-specific CPA. Again, one thing to flag, we've worked with a lot of people where their CPA wasn't aware that farmers fill out a different special form and they filed the wrong form and it caused a big issue with the IRS. So again, Schedule C, if you have a farm, you need to fill it out. It's super important. Don't fill out Schedule C for a farm. Now, another really common form is Form 4562. So this is depreciation and amortization. And these are big fancy words for basically, as a farmer, you have equipment, you have machinery, you might have land, you might have breeding stock. All of these things are capital. We'll go more into depth on this later. And you got to record capital different than a normal business expense. So almost all farmers will have to fill out Form 4562 as well. And then Schedule C, farmers don't fill this up, but if you have another business, so like you do farm consulting, or you make value-added products, or you do like you do processing or anything like that, that is probably going to be Schedule C rather than Schedule F. So it's very common for farmers to have both, just because many of you will have vertically integrated businesses. So these are the forms we'll be talking about, and you can just Google IRS and then what are any of these form names, and they'll pop right up for you. So we're going to spend most of our time on Schedule F. So for those of you who came to our bookkeeping session, one thing we recommended was setting up your chart of accounts so that it matches Schedule F. And so at the end of the year, when your books are closed, you can just, basically take the number from your profit and loss and just stick it right on this form. So I'll go through a few of these lines. So line 1A. So sales of purchased livestock and other resale items. So this is stuff like if you buy a feeder calf and then sell it as a fat steer, or maybe you go to the farmer's market and you don't raise chickens, so you buy chickens from another farmer and sell them at your booth. These kinds of sales would go in line A. Most of y'all are probably going to put the bulk of your revenue in line 2. So this is sales of livestock, produce, grains, and other products you raise. So any livestock that was born on your farm, and then obviously anything you grew out of the ground, this is going to go in line 2. And then lines 3 through 6, these are a little bit more unusual. You will receive some kind of Form 1099, so Form 1099 PATR for a cooperative distribution, or 1099 Gov for any agriculture programs you do through the USDA. Now I have bad news. If you get like a grant from USDA or anything like that, that is unfortunately taxable revenue. You do have to put that on this form, which does suck, but it is what it is. And then if you have any other income, so if you do custom hire machine work, that would go in line 7, and then any other farm related income, maybe like a little consulting revenue, or if you have, and actually, Una, you want to explain what this fuel tax credit is?
Yes. So I'd like to talk about the line item 8, especially federal and state gasoline or fuel tax credit. So this is a refundable credit that for federal taxes paid on fuel used for only off-road farming equipment. So it is only for the clear diesel or gas which you pay taxes for, but used only in farm, not on the highways. But usually, because you don't use it on the highway, you don't need to pay taxes, but you already pay taxes. So for that, you can claim 18.3 cents per gallon from the gasoline purchased. So you can get a credit for this tax paid. So for that, to claim that credit, there are 3 areas you need to put information regarding this credit on your tax return. So number 1, on Schedule F, line 19, gasoline, fuel, and oil section. So you can put the gasoline, fuel, and oil expense amount here. So you can claim the expenses on that. And then number 2, you need to file Form 4136 to claim the credits. So you need to file that form to claim the credit. That's the number 2 item. And then after claim the credit, number 3, you need to put this credit amount as an income on Schedule F, line 8 here. Following year, if you're using the cash method. So because you already you claim the credit this year, and then you get the credit next year. So you need to claim for that credit as an income next year if you're using cash method. If you use an accrual method, you need to claim at the same year. So for this credit, there is a documentation requirements like a records of the purchase, is like a receipt showing dates when you bought this gasoline and how much you bought it, like gallons, and how much taxes you pay for. So that's records need to be kept to show the IRS that this is the information I have to claim it. And that's the information we need to claim the credit. And then if you would like to discuss this further, or you want to ask about specific situation, you can email us to ask about that. And I'm happy to talk about this credit with you guys.
So basically, there is a big paper trail for this one. So if you have a tractor fuel intensive operation, this one might be worth it for you. But if you have like, a small fruit and veggie operation where you're really not using your tractor that much, you may just, listen to what Una just listed out and say like, hey, keeping that many records is just not worth the small tax credit I would get from it. Yeah, that is one of the options available for farmers as far as like special tax credits.
And we have a few questions. So can you specify for line 2? Can you specify that a little bit more?
Yes. So like I said, line 2 is likely where most of your farm revenue is going to come from. So I'm going to start with the, producing, growing things side of the world. So if you grow grains, fruits, veggies, herbs, flowers, anything like that, that's going to go on line 2. Also, a lot of livestock will go on line 2. So basically anything that was born on the farm will go on line 2. The only thing that will go on line 1 instead is any livestock that you purchased from someone else, raised for a little while, and then resold or, processed or whatnot. That would go on line 1 instead.
Okay, great. And then I know you're going to hop into this in a moment. But another question was, for the cost of seedlings, what line do we use?
Yeah, good question. Reba, were there any other questions on the revenue side of this Schedule F?
Nope.
Okay. All right. So yeah, good question. So actually the expenses side of Schedule F, people oftentimes find this easier because, most of these words make more sense. For example, line 26, there is your seeds and plants line. So you guys can probably, read through this, and, most of these are pretty straightforward. If you've got other expenses that don't fall neatly into one of these buckets, so like software and technology is a common one, or like cost for advertising is another one. You can just put that in line 32. Just a couple of things here. So line 10, car and truck expenses, we'll talk about that one. There's some weirdnesses around how you do your vehicle expenses. Depreciation, again, we will talk about this in more detail when we talk about Form 4562 and depreciation. Interest, this is a big one. So any loan interest you pay is an expense you can put on your tax forms. So it's important to make sure as you're making those loan payments, you're splitting out in your books what is paid to the principal and what is paid to the interest, so that you can put your interest in lines 21, and make sure you claim that deduction. Any other questions on the expense side of this.
So we have a question about, it just says, what about if livestock was purchased and sold 2 or 3 years later?
Yes. So that is getting into kind of like an ask your CPA question. A lot of times, if you're holding an animal for more than a year, it ends up being capital. So then there is a capital purchase you make when you acquire the animal, and then you depreciate the animal for a couple of years, and then you have that capital sale, which will turn into capital gain for you when you sell it a couple years later. So if you have that situation a lot, it can be worth working with a CPA just to make sure you have that correctly on your balance sheet. So yeah, especially the cattle folks out there, it can be difficult to keep track of that over different tax years.
And then we have another question. If you pay your mortgage through your personal finances and not your LLC, do you still include the interest payment on line 21A?
Great question. So there are a few things on here where if you live on the farm, so like your mortgage interest and like your utilities payments, sometimes even like your property taxes, um, some of it goes towards the farm, some of it goes towards your personal expense. Again, this is one where it might be worth asking a CPA, like, how should I split it? Should I do it 50-50? Or actually, like, the farm is huge and my house is tiny, so it should be like 90% on the farm, 10% on me. I wouldn't try to like gamify this too much and try to like put it all on the business. Try to come up with a split that feels reflective of reality of, you know, um, if you live in a big fancy house and you have like a quarter acre in the backyard that you farm in, maybe less of the mortgage should go on the farm. Or on the flip side, if you live in a small house, but you've got a 2,000 acre property, then obviously most of the mortgage interest should go on the farm. So that one is very just like personal situation dependent. But yes,
And
some
then,
of it should go on here. And same thing with utilities, if it's like one utility bill for your house plus your farm.
and then we have another question. Where would land clearing or land preparation be classified? And then
Mm-hmm.
this is part of a land management plan with NRCS with corresponding grant income.
Oh, good question. Okay, so anything related to NRCS will go in line 12. You've got conservation expenses right here. There is um, some restrictions around how much you can claim here. So like I think what they're trying to prevent is like if it's a new farm and the only expense you have is conservation and land prep expenses, there might be some restrictions on how much of that you can claim. But yes, definitely put anything NRCS related in line 12. And then if you've got like a normal infrastructure project, um, infrastructure falls into like a funny category where sometimes it needs to be depreciated, and sometimes it can just be expensed. So if it's a smaller project, like, I paid a contractor to come out and clear some trees and it cost $1,000, then you could just, put that on expenses. You would probably put that under like custom hire or labor hired, depending on how the person wanted to categorize themselves. But if it was like, hey, I had like $20,000 of land preparation expenses that wasn't related to NRCS, then that would probably need to be like a depreciated infrastructure project. Just so you guys know, and I know we'll talk more about depreciation, but the IRS threshold for when you might need to count it as something to depreciate is when it's over $2,500. So if it's a, project that's over $2,500, you probably want to ask about whether it needs to be depreciated. Good question, though.
And then we have one more question. If I rent land far from my house, are the car mileage and gasoline usage counted as costs?
They are not. So the IRS does not like you to include your commuting costs as a business expense. But certainly any mileage you have, like, from the farm to like go pick up supplies, or from the farm to the farmer's market, that would count as mileage. You can count as an expense. But yeah, generally from your house to your main place of work, which would be the farm, that does not count.
And then we just got one more question in there. So if expenses on line 12 are capped, do they carry forward?
I don't know the answer to that question. Una, do you know the answer to that one?
Yes, you can carry forward. It's up to 25% that year, up to 25% of your gross farm income. You can use that, and then you can carry forward in the future years.
Okay. And we're getting a few more in there. So what lines are for the costs from the farm to farm market?
Like the mileage cost?
Kelly, can you clarify that for us? Are you looking for the mileage costs?
Yes, yes.
Yeah. Yeah, so that would be line 10 under car and truck expenses.
Okay.
Yeah.
The gasoline usage, should I put it in the 32 other expenses?
What kind of
As-
usage?
Gasoline, if I harvest my crop at a farm, then on land, then I go to farmer market, I will use the gasoline. Should I count?
Yeah, so so I'm actually just gonna skip ahead. Ignore the quiz, don't look at the answers. I'm gonna skip ahead to this question about how to handle car and truck expenses. So car and truck or vehicle expenses, there are two ways you can tally up the expenses, and you have to pick one of the two ways. So option one is using mileage. So basically you keep track of the number of miles you drive. So if it's 20 miles to the farmer's market and you go 50 weeks a year, then that's 1,000 miles. And then the IRS will reimburse you, will let you use 70 cents per mile. So you would put $700 as your mileage expense. So that's option one. Option two is you keep track of all your actual expenses. So gasoline, car maintenance, car depreciation, car insurance, all of that kind of stuff, and keep track of that. Now, if it's a vehicle that you use for personal use as well as farm use, then you will also just need to make sure you take those expenses and just use the percentage it was for the farm and put that on the taxes. So that's like an extra calculation you have to do. So yeah, these are your two options. People have different preferences about which one they find easier to track. So part of this is a personal preference. However, if you're trying to like optimize your taxes, in general, if you have a newer vehicle, tracking actual expenses will generally get you a bigger deduction, because it allows for depreciation, which is bigger when a vehicle is newer and therefore more expensive. In general, if you have an older vehicle, generally the mileage approach gets you a bigger deduction. However, you are not allowed to switch from actual expenses to mileage. You are allowed to go the other way around. You can go from mileage to actual expenses later. So if you buy a car and you're planning on keeping it for a long time, you might want to do mileage. If you are someone who likes to, get a new vehicle every few years, then tracking actual expenses might get you a bigger deduction. So between like how much of a deduction do you want and like how easy do you want to make it on yourself to track this, people have different preferences around this. And so this one just, depending on your personal and business situation, I don't know exactly what the right answer for you will be. But all of this will end up way back on line 10. That was probably a longer answer to your question than you wanted. So sorry about that.
And no other questions.
All right. And if other questions come up, feel free to drop them in the chat. We can always go back. Okay, so I have talked about capital and depreciation a lot already, but I haven't explained what this actually is. So capital is basically stuff for your farm that has a multi-year useful life. So your infrastructure like your fences, your equipment like your tractors, fruit and nut trees, because those have, multi-year lives, improvements to your property. These things you have for a long time, and basically the IRS says, you can't take the whole expense in the first year because you're going to have this thing for a while. You got to like take the cost of it and depreciate it over multiple years. So we're going to just do a little quiz of like which things count as capital versus which thing is an expense, which you can just, tax fully in that year. So first question, if you build a barn, is that capital or not capital? You can put answers in the chat.
Okay. And while they are answering, Alex, we did get another question
All right.
for the Schedule F form. So are taxes on line 29 real estate taxes or other taxes paid? And it
All
says with,
taxes.
okay. And just to add on a little bit there, with a Texas agriculture card, we are excluded from sales tax on farm supplies.
Amazing.
So what taxes would that be applicable in that line?
Yeah, so if you don't have to worry about sales tax, this would include your property tax for sure, and then state, local, federal, any income tax you had to pay.
Okay.
Yeah, and there's oftentimes a funny calculation that will happen throughout all of these tax forms where the federal government will say like you can't use your federal income tax paid from last year to get a deduction this year. So there in your form 1040, you'll have to explain federal tax you paid last year. But certainly like something like property tax could be a deduction here. Okay. Did people have answers for if the barn is capital or not?
We do. 3 answers for capital.
Yes, that is correct. All right, next one. If you build a new hayloft for your barn, does that count as capital or not capital?
Okay, some answers are starting to roll in a bit. Okay, so we have 2 answers for capital.
Yes. So yeah, improvements to any existing infrastructure you have definitely count as capital. What about your tractor? Does that count as capital?
Okay. So we have 2 for capital, and then we have 1 that says depends on how much it costs.
Yeah, that is a good answer. So yeah, that IRS threshold is $2,500. So if you have a tractor that's less than $2,500, you don't need to mark it as capital. Most tractors are above $2,500, so generally it's going to be capital. But yes, that is the correct answer. What about a tractor repair?
Okay, the answers are starting to roll in a bit. Okay. So far, we received 2 responses. 1 that says it's an expense,
Mm-hmm.
2 that are saying expense, and then another one that just says no.
That's correct. It is not capital, it is an expense. And so there is a line for repairs and maintenance on your Schedule F. All right, what about your if you build a bunch of fencing?
Okay, we have a couple responses for capital.
Yep. Yep. And it usually is again, there's that $2,500 thing. And if you have like, cheap electric fence, it might be below that threshold. But yeah, usually it is capital. All right. What about vegetable seeds?
Okay, the answers are rolling in. So we have a few for expense.
Yep, exactly. Not capital is an expense. You guys already saw that on the Schedule F. I love it when people ask questions ahead of time that reveal the answer. All right, what about if you get some like apple tree seedlings?
Okay. So we have a couple of responses for capital.
Yep, that is correct. Y'all are crushing this. All right, so stalkers, we already talked about this. If you have them for a year or less, they are not capital, they are an expense. But if you keep them for more than 1 year, then they probably are capital. So this one's confusing. We already talked about this. But what about if you get some cows for cow-calf operations and they're going to be mamas, you're not going to take them to processing in a year? Is that capital or not
Think.
capital?
Okay, they're starting to roll in. I think you tripped them up a little bit. Okay, so we have a couple of responses for capital.
Yes, that is correct. Breeding stock generally are capital. All right, so the IRS has some funky rules about when you do depreciation, how many years do you depreciate over? These things do not always reflect how long these things are actually useful for. The silliest example of this is new farm machinery and equipment has a IRS determined useful life of 5 years, but used farm equipment is longer at 7 years. Again, it doesn't make sense. Just use, they have a whole schedule of this on the IRS website. Just use what they tell you to use. So there are lots of different ways you can do depreciation, especially after the, one big beautiful bill was passed changing a bunch of tax stuff for 2025. There are a lot of methods here. So the takeaway for you guys is if you have a lot of equipment, breeding stock, land, anything that you would depreciate, well, land doesn't depreciate, but anything that you would depreciate, it may be worth talking to a CPA if you really want to optimize how much tax you have to pay. If you don't have that much capital or you just want to keep it simple, we recommend using something called straight line depreciation. This is the simplest because you basically take the purchase price and you divide it by how many years you depreciate it over, and it gives you, the same number each year. This will not get you in trouble. This is always compliant. It just may not be the most optimal depending on your farm situation. So your depreciation form, this is form 4562. And so, as an example, I'm going to use the 10-year property line because the math is a little bit easier here. So if you've got $10,000 worth of 10-year property, so let's say you bought like $10,000 worth of fruit trees, you depreciate them over 10 years. So this column here is called convention. The easiest convention to use is HY, which is half year. And this is basically saying we assume you bought it halfway through the year. So in the first year, you got the thing. So if you bought something in 2025 and you said half year, you basically take like a half year's worth of depreciation that first year. And then, you do all of your years of property. And then in the last year, you would do that second half of the year. And then the method, so S/L, this is straight line. So if you got $10,000 worth of 10-year property, this is assuming this is not the first year, so it's not the half year. So this is like second year, third year, fourth year, where you take the whole year. You just divide 10,000 by 10 to get $1,000 a year. So we talked a little bit about, in the bookkeeping side of this on your balance sheet. So your assets, so asset is the same thing as capital. Assets are the things on your balance sheet that they get depreciated every year. So we recommend when you buy an asset, you put it on your balance sheet in your books. And then every year, once you do your taxes, you put the depreciation on the balance sheet. So if you bought something for $10,000 and then you depreciate $1,000 worth of it this year on your balance sheet, it should say you have $9,000 worth of value left to depreciate. Now, again, getting back to this, by the time you finish depreciating, the thing is still worth something usually. So like if you buy a new tractor after 5 years, hopefully it is still working and it still has some market value, even though the depreciated value is now 0 because you've done all your depreciation. So this again comes down to personal preference of like, what do you want to put on your balance sheet? Usually the easiest thing from an administrative standpoint is to use the tax value. So after 5 years, your tractor is not worth anything on your balance sheet. But then if you go to like a bank or something and need to like show the value of your farm, you would want to put the market rate of, I bought this tractor for $10,000 5 years ago. It's fully depreciated, but I could still sell it on the secondary market for like $5,000. So I'm going to tell the bank it's worth $5,000. So again, that's where some of this stuff can get complicated. But just know, put your depreciation on your books each year to help keep track of it. And just know that the depreciated value may not reflect the actual market value because this stuff is weird. And it's just how the IRS tells us to do it. Any questions on depreciation? I know this is a complex concept. So again, takeaway is if you're not trying to optimize, use straight line. We have a little calculator we can send you if you need it to help like calculate the correct amount. If you're looking at any of these more sophisticated depreciation methods, this is where you would probably want to get a CPA's help making sure you do it right. Reba, any questions in the chat?
No questions. Oh, we just got one. So what if you sell something that is fully depreciated? Do you have to claim something?
Una, do you have the answer to that one?
Yes. So if you sell $10,000 worth of asset, but in the book wise it's a zero base, but you got $5,000 cash, you report as a gain for $5,000.
And would that be, Una, would that be recorded as like other income on your Schedule F, or would that be in like the form 4562 around like a depreciation, like a capital gain?
It's gonna be gain in your book, so yeah, Schedule F.
Okay. So you could just put it as like other income here.
Yeah, yeah.
And then if you sell it before it's fully depreciated, that would be a capital gain, right?
That will be adjusted because depreciation amount will not be fully depreciated. So the gain would not be as much as a fully depreciated asset.
Okay, no more questions.
Good question. Yeah, it's like the Schedule F's not too hard, and then as soon as you start getting into this stuff, it really steps up in complexity. Okay, so we already talked about vehicles. So one other type of federal taxes, employment taxes. So here's where it gets a little bit different, 1099 versus W-2. So if you have contractors who you file Form 1099 for, you do not have to pay their employment taxes along the way. Your contractor is responsible for paying their own income taxes. So you do need to send them their 1099 form and file it with the government, but you do not need to worry about actually paying the taxes along the way. For W-2 employees, you do have to pay their payroll taxes along the way. You can see what the rates are here. If you have W-2 employees, honestly, payroll software is probably worth the cost because it will calculate how much tax you need to pay and it will file it for you. It will do your quarterly paperwork. If you choose not to go the payroll software route, you will need to keep track of this and you will need to file those payroll taxes yourself once a quarter. The IRS website has instructions on how to do that, but make sure you do this. You will also probably be responsible for unemployment insurance taxes. So each state sets a different rate of like how much they charge you for unemployment insurance taxes. So you'll have to register with your state and figure out what that rate is. Again, payroll software is really helpful for this, but if you don't use payroll software, you'll need to file this as well. And then just one other like paperwork note. You want to have a Form W-9 for all of your contractors and a Form W-4 for any of your employees. And this will just make tax time easier. And we know that in the small business world, paying people cash under the table is very common. Technically, you are supposed to pay taxes on that kind of stuff. So, you know, it just depends on your own risk tolerance of like wanting to get caught or not by the IRS. To make your own lives easier, I would just pay your taxes and file your 1099s and W-2s. But, you know, this is something that happens in the space. But don't do that. Any questions on employment taxes? If you guys have any employees. And just so you know, the 1099 threshold is $600 or more. So even if you paid a contractor for like a one-time job for like $1,000, you should still send them a 1099. Okay. So we talked about estimated taxes at the beginning of this. So estimated taxes basically just means like the IRS wants you to pay your taxes along the way. They do not want you to pay all of it a year later. So if you guys have or ever have had a W-2 job, you'll know this because like, you know, you have tax taken out of your paycheck, you know, every paycheck. And then at the end of the year, generally you don't owe much on your actual tax filing, or you may even get a refund. However, if you have a business or a farm, you will need to pay estimated taxes quarterly. Now, the nice thing is for farms, instead of doing this quarterly, you can just do it annually. And that you can do that if more than 2/3 of your income is from farming. So again, if most of your income is on that Schedule F, then you can just pay annually. But if most of your income is from like a Schedule C business or from like a W-2 job, you'll need to do estimated taxes along the way. Again, if you have a W-2 job, that's already handled for you. But if you have like a Schedule C, or if you're like an independent contractor, just be aware of this like estimated quarterly tax obligation. Now, some of you be like, okay, well, how much do I have to pay in estimated taxes? So the safe amount where like the IRS will not get mad at you, you will not get fined. So if your AGI, this is like fancy tax speak for like how much profit your business made. If your profit was less than 155,000 or 150,000, you can just pay 100% of whatever your 2024 tax obligation was. So if in 2024 you owed $10,000 in income tax, you can send the IRS $10,000 in income tax for 2025 as your estimated tax, and that will be good to go. If your AGI, adjusted gross income, which is again fancy word for profit, if your profit was more than $150,000, then you have to pay 110% of whatever your 2024 tax obligation was. So in this example, if you had $10,000 that you paid in taxes in 2024, your estimated tax for 2025 would need to be $11,000. Any questions on estimated taxes?
So we did get a question on employment taxes.
Okay.
So the question was, what if your employees get housing as part of employment?
That is a good question. Una, do you know if that counts as income, or is that a separate issue?
As far as I know, it's a tax-free as a like a employment contract. You get it as an employee. It's like a benefit. But as an employer, you can deduct as expenses.
Oh, great.
That. Yeah.
And then we received another question. So if you are in the startup phase and have not started selling, but have expenses, would you need to do anything for estimated taxes?
No, asterisk. So if you are unprofitable, obviously you wouldn't owe any taxes, so therefore you don't owe any estimated taxes. But but just be aware that the IRS doesn't just look at your farm. The IRS looks at you as a whole person. So if you have like an unprofitable farm, but a profitable other business, then you will need to pay estimated tax for like the entirety of what that your personal situation looks like. Again, if you have a W-2 job, then your paycheck withholdings should be taking care of that. So that shouldn't be a problem. Yeah, if you are unprofitable, you don't need to worry about this yet. Asterisk.
And then we had another question in there. So where would the housing expense be put for employee housing?
So I think this this might be an employee benefit program, I think. It's a tax deductible benefit. Or would it be under other expenses?
I believe it's other expenses, but I need to look into more, but like employee related other expenses. You can put it in the Schedule F 32. But I will look into more and then find the answer, specific answer for that right now.
And in general, the most important thing is just making sure your total expenses is the right number. So don't freak out too much about exactly which box it needs to go to. As long as the total expense is correct and you're paying the total correct amount of tax, you should be good to go. So if you have something where like, hey, I paid a guy to fix my tractor, does that go in repairs and maintenance or does that go in labor? Again, don't stress too much about it. Just put it into a bucket that makes sense. And just make sure the total is correct. That's where you should put your stress and your time.
And a clarifying comment was just that she was unsure if employee housing would be a Schedule E or go into Schedule E or not.
For Schedule E wise, you need to receive a rent income to report that income on Schedule E.
Yeah, so Schedule E is more like if you're doing agritourism and you're renting out houses, or if you just have rental property that you have kind of separately of your farm stuff. So yeah, if the employees are not paying rent, you don't have to worry about that.
Okay. And then we have another question in there. How about your time and labor for the farm? Is it to be counted as an expense? What line do we use there?
That is a great question. It depends on if you pay yourself, a salary or, something like that. So if you pay yourself a salary, then you would put that in line 22 for labor. Oftentimes what business owners do is instead of paying themselves as an employee, they just take, the profit out of the business as an owner distribution. And basically the IRS says like the owner distribution is the same thing as the profit for the farm. And so it's just taxed as the same kind of thing. So again, if you're an LLC, this is where the pass through comes through of like, it doesn't matter whether you pay yourself or do it as an owner distribution. It's the same amount of money as like business profit. Because either it shows up as farm business profit or it shows up as like, income for you on your personal return. But when you add it together, it's the same. Where it matters is if you like are an S Corp or a C Corp, where, how you structure that can affect how much tax you pay and like where you put it. So like C Corps in particular, if you take it as a dividend, it might count as like capital income, which can be taxed as a lower rate than, labor income. But again, if you're getting into this kind of situation where it's a very high income situation and you're trying to optimize this is where you probably might want to talk to a CPA about making sure you have it structured the right way.
Okay.
Yeah, these are good questions. Thank you guys for asking so many good questions.
And then we had another question. Would it be fair to expect that it is common for the Schedule F to pass through taxable losses while also reporting revenue? And
Yes.
then, okay.
Yes.
And then
And with the added piece of context is like generally the IRS gives you like 5 years of running a loss on your farm before they start to be like, hey, this might be a hobby farm. I don't know if this is like a real business and you can't like take a tax deduction for your hobby. Um, so just know that yes, losses, taking a loss on your Schedule F is totally common. Should totally do that if that's the real situation. But if you do that for too many years in a row, you're going to get more scrutiny. And so just make sure that you're like keeping really good track of receipts and that kind of stuff. Reba, was there another question?
so it was a part two of
Okay.
that, where it just said, or that there may be more expenses than income, especially if you have other sources of income reported on your 1040.
Yeah, that's totally common. And again, making sure you add up all those business expenses is a really good way to lower your total taxable obligation. So definitely do that. Definitely take a loss if the farm is actually at a loss.
Mm-hmm. And then we had a question in there since you spoke about the hobby farm.
Mm-hmm.
Can you explain that a bit more? And then a follow-up question is it not taxable?
Yes. So basically, Schedule F and Schedule C and all these things, they are for business income. Um, and so if you are a backyard gardener and you never really intend for your garden to make a profit, it's just something you like to do, and you have some expenses for your gardening expenses. Basically the IRS does not want to subsidize your hobby. So if the business is unprofitable year after year after year, they will be like, hey, is this a real business? And they might come after you from an audit perspective. So, just be honest with yourself of like, is this a business or is this a hobby? And if it's a hobby, then don't try to claim these expenses as deductions. But if it is a business and it's just an early stage business that's losing money at first, because that is, again, very, very common in farming. Farming requires a lot of upfront expenses. Definitely just like, take your loss, it's going to happen, and then that can deduct your tax obligation from your total income if you've got income from other places.
The important thing about the hobby farm, if you have an income, you need to report that to the IRS, even though you cannot deduct the expenses, unfortunately.
Oh, that's interesting. So if you've got like $100 worth of tomatoes you sell to your neighbors, you
Yeah.
still got to count that as income.
Yes.
I'm sorry, I'm a little confused here. You said that like I do the backyard farm kind of garden, but I do sell to my neighbor if they need it. So my seeds still cannot be deducted from the cost, or I can deduct the seeds, the cost of seeds, cost of fertilizer, cost of compost, this kind of stuff. Can I deduct from the sale? For example, I feel I can sell my stuff for $100. I feel I need to spend maybe $30, $40 for all other cost. Can I still can report? I mean, I will report the income, but can I use another I mean, can I also deduct $30 for all the cost?
So if you can make a profit, like 3 years out of 5 years, then
Mhm.
they count it as a real business. But if you keep making a loss, that's what IRS think that that's not real business. So if you can actually make a profit, it doesn't matter the amount, that's okay. You can deduct the expenses from your profit.
Okay, but the reason I ask is I feel it's a good hobby, but I mean, compared to time and labor, I work too. Anyway, I work, but compared to my work, I feel I can much more money use that time and energy. That's why I say that is time and labor will not count as a cost.
If you don't have like an S corporation or anything, it's just a profit is your labor, and that you cannot count it as an expense yourself.
Okay, until I have like a LLC, can I hire myself if I'm really serious? I want to go get a big land, but maybe at the beginning I still do myself, or I combine. I'm not just a pure farm. I will use that farm to maybe do certain type of business. Can can I kind of say hire myself to manage this farm, then but for example, I provide a service to some people and they come to farm to do something. So can I can I self-employ myself like that position?
So if you're an LLC, if you pay yourself from the LLC, the tax impact ends up canceling out. So if you pay yourself $100, that's reduces your taxable income by $100 from the business, but increases your personal income by $100, and so it just cancels out. So if you set up an S corporation, then whether or not you pay yourself starts to matter more. But if you're an LLC, it doesn't matter how much you pay yourself, if any. It'll cancel out.
What is S corporation? I'm not sure. Can you write down on the chat?
Yeah, so it's basically just a business legal structure. It stands for Small Business Corporation. And again, we're not lawyers, so can't explain like specifics of this. But it's kind of like a hybrid of an LLC and a true C corporation, where in some ways it's pass through taxation, and in some ways there's like self-employment tax savings. So I'm going to be honest, if your business is really small, it's probably not worth it to, pay the legal fees to like get this set up. But if your farm gets bigger, this might be worth looking into, especially if it starts to get pretty profitable.
Okay, thank you.
Yeah, this stuff gets complicated. Okay. All right. So, we had another little quiz here about like what you can and cannot deduct. Actually, most of this came up already, but a few other things I'm going to flag, and I'm just going to zoom through this because we are, I want to make sure we get you all out of here on time. So if you buy supplies, but you haven't used them yet, Una, you said they're like 50% deductible now?
Yeah, you prepaid for next year's, like for example, seed wise, you can deduct 50% out of all your expenses for this year.
We already talked about farm mortgage interest. It is deductible asterisk. If you live on the farm, you'll have to take out the personal portion of that. One other question we get is, hey, I work from home. I like do farm stuff in my house. Can I deduct part of my home mortgage? The answer is no. The IRS has kind of cracked down on this after COVID and work from home. The only exception is if there is a room in your house you use only for the farm, So for example, you use your garage to store all of your frozen meat and do all of your distribution to your customers, then you can deduct that. But in general, just like general work from home stuff is not deductible. Here's like a funny housing one. Housing for permanent workers is not deductible, but if you have housing for temporary workers, it is. If you do continuing education, like you go to a farm conference, that is a deductible expense. Make sure you count that on the farm. Likewise, if you have like farm related membership fees, like you subscribe to a farming magazine or you have co-op fees, those things are deductible. If it's something that's like not business related, like your personal Hulu account, that is not deductible. Fines, fees, and penalties. So if like your farm checking account has a fee from the bank, that is deductible. But if you get like a speeding ticket on the way to the farmer's market, that is not deductible. Utilities, same thing as the mortgage. Deductible, but if you live on the farm, you got to take out the personal stuff. Stuff like boots or like farm clothing can be deductible if you only wear those things at the farm. If it is mixed personal and farm use, you cannot deduct it, unfortunately. Travel meals. So these, if you're on the road, you're driving 6 hours to a farm conference and you stop for a meal, that is deductible, but it's only 50% deductible. It's not fully deductible. Okay, any other questions on federal income tax stuff before we dive into other types of taxes?
No questions for now.
All right. So if you are in a state that has state income taxes, most of them will just use your federal income tax and then just like tack on an extra percent. So that makes it pretty simple. There are a handful of states where that is not true and you have to like do a different state tax return. So if you're in one of these 5 states, that's a little unfortunate, but you'll have to do a little extra work. But generally, these are not too complicated. Just look up what your state rate is. Sales tax. So someone brought up earlier that Texas has this cool program where you don't have to pay sales tax on stuff for your farm. A lot of states actually have that. So if you are not sure whether or not your state has this, after this webinar, go Google, my state agriculture sales tax exemption and see if they have anything like this. Here in Georgia, where Good Agriculture is based, we have the gate card. You can kind of see what it looks like. So if every time you go to Tractor Supply or whatever and you show your gate card, you don't have to pay sales tax, which is awesome. Now, sales tax on your farm products. So this is sales tax on stuff you sell. This one, unfortunately, is extremely state and local specific. So, for example, in Georgia, farm produce is not, you do not have to like pay sales tax on it, except one county in Georgia decides that it does want to charge sales tax. The other 158 counties do not. So again, if you don't know what your sales tax obligation is on the stuff that you sell, after this webinar, just go look up your state and locality tax rates and see what they charge. Now, in a lot of localities, farm produce, you do not have to pay sales tax on that. However, if you do value-added products, oftentimes you do have to remit sales tax. So like selling tomatoes, don't have to pay sales tax. Selling tomato sauce, you would have to pay sales tax. So again, unfortunately, you're just going to have to look up what your rules are in your state and locality. E-commerce platforms, so stuff like Square, Shopify, etc., can help you track how much sales tax you owe. They generally will not file the sales tax for you. You will probably have to go to your state tax center, so you can see this is the one for Georgia, and file monthly, quarterly, or annual sales tax. Oftentimes you have to file your sales tax return even if you don't have sales tax activity that period. So like Good Agriculture, we don't sell products, we only sell services like accounting services, which don't get sales tax, but we still have to go into this platform once a year and say, nope, we still didn't have any sales tax activity. So just be aware that even if you don't owe sales tax, you may still have to file and tell your state that you truly don't owe sales tax. Some states also have this thing called use tax, where if you buy something in another state, then you have to pay sales tax in your home state. So if you're in Georgia and you go across the border to Alabama to buy a tractor from a dealership, and you bring it back to Georgia, Georgia wants you to pay sales tax on that tractor. In reality, this thing doesn't get enforced much, but just know it is technically a tax you were supposed to pay. So again, if you want to minimize your stress, we recommend going ahead and paying it. Okay. Again, I'm going to kind of zoom through the poll. Any questions on sales taxes before we get to property taxes, which will be our last topic?
No questions yet.
All right. Good stuff. Okay, so property taxes. If you own your land, you got to pay property taxes. Again, this is very state and local specific about what the rate is and how it works. There are several exemptions out there. So one, homestead exemptions. These are exemptions for personal property that you live on. So if you live on the farm, you should make sure you get your homestead exemption if your state has that. Likewise, a lot of states have agriculture exemptions and or conservation exemptions. So again, if you live on the land and you don't have one of these exemptions already, right after this webinar, go Google what your state offers. A lot of states, the deadlines will be in the spring. So Georgia's is like April 1st. So again, go look up what this is immediately and make sure you get this exemption if you don't have it already. It can save you a lot of money on property sales tax, or sorry, on state property tax. Okay. Any questions on property taxes?
No questions.
All right. All right. So lots of tools and resources out there. We talked about bookkeeping a little bit. Financial and accounting software can be really helpful to just keep track of all of this stuff. So QuickBooks, Xero, Wave, all of these kinds of things can help keep track of your profit and loss and your balance sheet for your income taxes. Payroll software can help keep track of employment taxes and also help you file like your 1099s at the end of the year. Sales tracking software can help with the sales tax side of stuff. And then, of course, we've got some templates we can share with you if you want to do it yourself on like Excel or something. Tax prep software. So I know that TurboTax supports Schedule F. I'm not sure about the other tax softwares, but you can probably just Google like tax software Schedule F and, Google will help you find the right one for you. If this seems overwhelming or you have a situation where you have a lot of stuff to be depreciated, it can be worth hiring a agriculture CPA like us. We can file your taxes for you. And then can also be worth working with a bookkeeper to pull your numbers together over the course of the year and just, save the like box of receipts problem. Again, we are bookkeepers and we would be happy to help you with that. Any other questions that popped up before I hand it over to Reba to talk through how we can help if you guys are interested?
Mm-hmm. So we did have a question on just if you can go back to the property tax slide again.
Yeah.
Then Kelly, did you have any questions on that?
No, actually, it's clarified. Thank you. No, yeah.
Okay.
Yeah.
No
Yeah, this is
problem.
unfortunately one where we don't have a lot of specifics because it is so dependent on where you are.
Okay, there are no other questions there. Okay, everyone. So I know that we went over taxes, but in order to get to your taxes, of course, we like to say that bookkeeping comes first. So what we do is we help our farmers wherever they are in their farm, whether you're just beginning or you are really far in there and you want to scale up. So we have three major buckets that usually our farmers fall into. So we have the basics, which is farmers who would rather, of course, be working in the field and you just want to get caught up on your bank activity, really keeping things organized, and then, just getting a quick snapshot where you get those up-to-date financial statements, your profit and loss sheet, your balance sheet as well. It starts at about $75 a month. And of course, we have it where this is for those beginning farmers and those smaller farms that just want to stay compliant. Then we have our essentials tier. So we say this is really for farms that really want to see about their profits and get insights on the data there. So this is where we get a little bit more into the numbers. So on top of the bookkeeping that we do, we also can customize your chart of accounts for your farm, and then show you, of course, what's making or losing money. We also help with prepping your Schedule F form, along with your depreciation form for tax season. You also get the chance to meet with our team for about a 30-minute meeting each month. And this one is at about $150 a month. And we like to say, like, this is when you are in the swing of things, and right now you're just trying to figure out how you can increase profits. And then our final bucket is the premium tier. So we like to say that this is when you want to grow and scale your business, and you want to get like that deeper understanding of what's going on with your business, and of course, looking at those growth opportunities there. So what's really cool about this one is we are able to break things out by enterprise, or what we would like to say is like the major products for your farm. So that way you can see which leg of the farm, of course, is more profitable than others. So that way you can plan that out. We also run through any what if scenarios that you may have. If you're looking to add on a product to the farm, we can also do that in this bucket. And of course, we know that this is helpful for if you're applying for grants or a loan or an investor. We help get all of that information ready for you there. And of course, this may be where you're like, I don't know where to get started, but I know that I need help. So what we like to say is you can find a time to meet with us, and that way we can talk it through with you, see where your farm is at, and then also figure out what bucket best fits for you. If you're interested, we do have the comment pinned in our chat. And the quote, and to get a quote, you can just go to goodagriculture.com/quote, or just click on the link there, and then we'll get you started. And then we do have our advanced farm bookkeeping webinar happening on February 19th. This is the final one in our series. Like Alex mentioned before, the first one we had in December really helped you get set up with the basics. This one was to help you for tax season, and the next one is to just build on what we spoke about in the basics webinar. So if you are interested, we do have you already registered. So you don't have to do anything, but if you do want to share it with a farm friend, or you know that there's someone else out there that may need that help, feel free to share this link to them, and we'll also have you registered for it. And then finally, we are offering tax filing service. As you know, Una, our CPA, is the one handling that, but that is specifically for our monthly bookkeeping customers. So if you are interested in getting some help with filing your taxes, let's first get started to see what monthly bookkeeping service works for you. And then after you get into the monthly bookkeeping service, that's when we can give you a quote. So we like to say that we want to just get into your books first. And then that way Una and the team will be able to have a chance to really look at what's going on. And then our starting price is $400 for our monthly customers.
And that includes your federal return, any state returns, your Form 4562, et cetera. Does not include any like sales tax filing.
And we just want to thank you all for joining us. We know that it was a pretty long night, and we thank you for all the great questions that you dropped in the chat. There may be some questions that we just didn't have a chance to answer for you, but we're happy to be there. As always, I'm Reba with Good Agriculture, and I can drop over our emails. So if you do have any questions specifically for Una, for Alan, for me, or for Alex, you can feel free to write us too.
Yeah. Thank you guys for being such a great audience and having so many great questions. This was as fun as talking about taxes gets.
For sure. Thank you all.
Thank you.